Hello and welcome to your weekly technical update, your guide to the charts that matter this week. I'm Andrew Gagan. Well, let's start with analysis of the broader Australian market, which has underperformed relative to its global peers. Violeta Todorova from Leverage Shares says the S&P ASX 200 is forming a lower high, which tells us that momentum is not strong and is showing that there is selling pressure building on the market.
And I believe that has a lot to do with the unfolding energy crisis over the past 2 months since the war in Iran began. So looking at the charts, the RSI is firmly in neutral territory. So I think the high in April at around 9,000 points is going to act as a resistance in the near term, and I believe there is a chance of further weakness in the coming weeks. So investors should be watching a minor support of 8,600 points, which in my view is going to be broken downwards, given that the relative strength index indicator didn't unwind the overbought territory yet. So I think there is a very good chance of the market declining to around 8,500 points. But ultimately, if there is no resolution at the Strait of Hormuz, if there is no peace deal reached and the conflict extends further, investors should brace for further decline to the key support for the XJO of around 8,262 points. So overall, I think the market is going to move sideways in the next couple of months.
While big tech has driven Wall Street to new records, Australian tech stocks have struggled to recover from the AI disruption sell-off earlier in the year. ProMedicus is one of those stocks caught up in the so-called SaaS apocalypse. Gary Glover from Novus Capital gives us his technical analysis.
The 50-day moving average is a really important marker for these stocks there. So once they get above the 50 and they're sort of trading above that, that's when they can sort of really trend. And if they break the 50, from a momentum point of view, you generally don't want to be there. So in the past there, we've seen breaking above the 50 has been a pretty good indicator of actually time to sort of start allocating capital into those growth names there. So, we have just pierced above the 50 here recently. It's the first time there for quite some time there, as you can sort of see on that chart there. You can see the last few times in blue there where we have broken above the 50 and we've normally trended. So these aren't sort of, these are high delta sort of stocks, so they move a lot more than the general market. And they're generally sort of trending. They trend up strongly and trend down strongly. They're probably not sort of stocks that tend to go sort of sideways too often, not to the saying that they can't, but breaking above the 50 is a positive sign there. So, we're now looking for sort of to see signs of strength there and keep building higher lows there, but some good signs there for ProMedicus.
Well, Australian banks have also struggled over the past couple of months since the outbreak of the war in the Middle East, with increasing doubtful debts and provisioning. This as the Australian consumer is showing signs of financial stress. Gary Glover analyses Westpac and NAB.
One thing I've noticed from an observation point of view is that oftentimes the first leg up in that bull market or the last leg up in that bull market can be 50% of the entire range. And we've just seen here with Westpac and NAB, the last rally here. So you're talking about like a 4 or 5 year bull market. The last 6 months makes up 6% of that, 50% of that whole range. So it's interesting there because you really got 1, 2, 3, 4, 5, 6 years of building this range there. And in the last sort of 6 to 9 months there, you get that fast move up there, and that's how often the highs come in and markets build tops there. So. That's an interesting technical point of view, just from a range point of view. But yet the secondary notion there, apart from the commentary, is we're starting to see signs of distribution there. So we're seeing these stocks sell off there with a bit more volume and a bit more gusto in that there. So sort of signs of distribution. So like we're talking about those growth names the last sort of 6 weeks, we're seeing accumulation at the lows. We're seeing sort of big volume at the highs here, which is sort of sign of maybe distribution, maybe selling there. So not so good signs there for the banks there. So be a little bit wary about financials there.
And that's it for this week's edition of The Charts. To watch, join us for more technical talk next week. Happy trading.